What if I told you that the absolute greatest tool of global capitalism was not the steam engine or the industrial assembly line, but a simple mathematical accounting trick invented by a wandering monk to prevent wealthy silk merchants from robbing each other blind? Welcome to Money's Hidden Past. Rich people lied, we fact-checked. Today, we are opening the oldest ledger in history to decode the mathematical secret that built the modern financial world. When we think about the sweeping era of the Italian Renaissance, our minds naturally drift to beautiful paintings and towering marble sculptures. We imagine Leonardo da Vinci carefully painting the Mona Lisa, or brilliant astronomers mapping out the vast mechanics of the solar system. But behind those beautiful works of art was a massive flowing river of cash. The Italian city-states were the wealthy, undisputed masters of global trade, moving massive fleets of wooden ships packed with spices and luxurious fabrics across the dangerous waters of the Mediterranean Sea. Managing a sprawling international trade empire requires immense logistics. A merchant living comfortably in a wealthy palace in Venice had to track goods moving through ports in Egypt and Constantinople and calculate complex currency exchanges across dozens of hostile borders. Before the late 15th century, the standard method of tracking wealth was primitive. Most businessmen relied entirely on a highly chaotic system called single-entry bookkeeping. It was essentially just a running diary of transactions, jotted down in a notebook noting who bought what and who owed money on a given day. Single-entry bookkeeping works perfectly fine. If you own a tiny neighborhood bakery, you look in the wooden cash box at the end of the long week. If there are more coins inside than when you started, you made a profit. If the box is empty, you simply go out of business. But this simple diary system fails catastrophically when you operate a global trade network. A merchant in Genoa might own a quarter share of a trading ship, owe money to a wool supplier in London, and have credits in Paris. While paying massive insurance premiums to protect against pirate attacks in a single-entry system, you have absolutely no reliable way to verify your own math if an unfaithful employee quietly steals a bag of silver coins from the warehouse or simply forgets to write down a massive shipping expense. The merchant would have no mathematical way to discover the fatal error. Business was expanding so rapidly that the financial architecture began to collapse. Merchants were going completely bankrupt without ever understanding why, because their handwritten ledgers were an absolute tangled mess of unverified numbers. They desperately needed a system that could mathematically prove its own accuracy. The brilliant merchants of Venice slowly began developing a highly guarded secret. They realized that every single financial transaction in the real world always inherently involves two completely equal and opposing sides. If you gain an asset, you must either lose another asset or gain a liability. This was the quiet, undocumented birth of double-entry bookkeeping, a system where every transaction is recorded exactly twice in separate columns, but the merchants fiercely kept this accounting magic to themselves, treating it as a closely guarded trade secret to maintain their economic dominance. The wealthy families, who understood this math, became untouchable oligarchs. They built sprawling stone palaces along the grand canals of Venice and passed their secret accounting ledgers down through generations, refusing to let outsiders see the exact mechanics of their wealth. Keeping the system a secret was a massive competitive advantage. If a rival merchant group from a competing Italian city-state attempted to build a massive trading fleet of their own, their unverified single-entry ledgers would inevitably lead to their financial ruin. The system remained an absolute mystery to the general public for generations, until a highly educated Franciscan monk stepped into the historical spotlight. His name was Luca Pacioli, and he was not a wealthy merchant or a banker. He was a wandering mathematician who absolutely loved the pure logic of numbers. Pacioli traveled across the wealthy Italian states teaching mathematics to the elite. He eventually became close friends with the legendary inventor Leonardo da Vinci. They lived together in Milan, where Pacioli taught Leonardo complex geometry, while Leonardo drew the beautiful geometric illustrations. For Pacioli and his upcoming books, Pacioli wanted to compile all the mathematical knowledge of the known world. So in the year 1494, he published a massive historical encyclopedia titled in Latin as a summary of arithmetic geometry and proportions. It was a heavy book that summarized everything from algebra to basic currency exchanges, but hidden deep inside this sprawling mathematical textbook was a specific section. A 27-page chapter detailing the business practices of the Venetian merchants. For the very first time in human history, the secret rules of double-entry bookkeeping were written down clearly and published for the entire educated world to read. Pacioli did not invent the system, but he codified and perfectly explained it. He boldly stated that a successful merchant requires three specific things: sufficient cash or credit, a highly skilled team of honest accountants, and an accounting system that can catch any mathematical mistake. Instantly, he laid out the specific rules of debits and credits that we still use today, instructing merchants to split their heavy ledgers down the exact middle. The left side was reserved for debits, which comes from the Latin word meaning he owes, and the right side was for credits, from the Latin word meaning he trusts. The golden rule of his mathematical system was absolute financial harmony. For every single debit entered on the left side of the master ledger, there must be an absolutely equal and offsetting credit entered on the right, maintaining a perfect state of equilibrium at all times throughout the year. If a merchant uses pure cash to purchase a massive warehouse full of grain, his cash account is credited because that physical asset is leaving the business, and his inventory account is debited because the grain is entering the business. The total financial value of the enterprise remains completely identical. Pacioli essentially formalized what we now call the modern accounting equation. The fundamental rule that assets must always equal liabilities, plus equity, meaning everything a massive business owns, is either owed to an outside creditor or belongs free and clear to the actual legal owners of the business. If you borrow 10,000 gold coins from a local merchant banker, your cash asset column increases by that exact amount immediately. But your liability column also increases because you owe that money back, keeping the entire mathematical universe of the ledger perfectly and securely balanced. Pacioli explained that at the end of the trading year, the merchant must tally everything. He must add up the entire left side and the entire right side of the master ledger. If the total numbers do not match perfectly down to the very last fraction of a penny, it mathematically proves that a mistake or a theft has occurred. The book warned merchants never to go to sleep if the ledger did not balance. This simple concept of self-balancing math revolutionized the entire global economy. It allowed business owners to finally sleep peacefully at night, knowing their vast fortunes were mathematically secured by the laws of basic arithmetic. Thanks to the newly invented Gutenberg printing press, this knowledge spread like wildfire. Pacioli and his textbook were translated into dozens of different languages and shipped across Europe to merchants, bankers, and ambitious royal families, democratizing the secret weapon that had made Venice so unbelievably wealthy. The widespread adoption of a double-entry bookkeeping changed the structure of society. It allowed massive banking families like the Medici in Florence to comfortably manage dozens of international bank branches simultaneously because they could mathematically audit their foreign managers with absolute certainty before the system. Investors were terrified of giving money to a distant sea captain because they had no reliable way to verify if his reported expenses were actually real. They simply had to blindly trust that he was not pocketing the corporate profits, which severely limited the amount of capital willing to fund risky foreign expeditions. Double-entry ledgers created an impenetrable paper trail of complete accountability. An investor sitting comfortably in a palace in Rome could confidently fund a massive spice expedition to the distant shores of India, knowing the captain would have to produce a perfectly balanced ledger upon his return. This newfound trust unleashed a massive torrent of investment capital across Europe. It allowed businesses to grow beyond the limitations of a single family unit, paving the exact historical runway for the creation of massive joint stock corporations like the legendary and incredibly powerful Dutch East India Company. Historians widely consider the publication of this accounting method as the birth of capitalism, because capitalism requires the precise calculation of profit and capital. You cannot confidently reinvest your massive corporate earnings to grow your global enterprise if you do not have a reliable mathematical system to tell you exactly what those earnings are. Pacioli also introduced the concept of the trial balance and the financial inventory, instructing business owners to document every single asset they owned, from their massive, heavy stone warehouses down to the exact number of silver spoons in their kitchen, creating a comprehensive snapshot of their total net worth on any given day. This rigorous approach to financial documentation shifted power away from kings and queens. Traditionally, power was determined by who had the largest army or the most noble blood. But the ledger created a new type of power based entirely on verified mathematical capital, allowing brilliant accountants to quietly control the fate of entire nations. Kings who ignored the strict rules of the ledger frequently bankrupted their countries, fighting expensive foreign wars without balancing their national checkbooks, while the merchant bankers who mastered the math grew wealthy enough to loan money to the crown, effectively turning absolute monarchs into regular paying clients of the bank. What is truly staggering about the legacy of Luca Pacioli is that the technological world has advanced beyond his wildest 15th century imagination. We have split the atom and built supercomputers that fit inside our pockets. We have sent human beings to walk on the surface of the moon. Yet the fundamental mathematics of the global financial system have not changed one bit. If you walk into the massive corporate headquarters of Apple or Amazon today and look at how their highly paid armies of corporate accountants track billions of dollars, they are using the exact same left and right columns that Pacioli wrote down in 1494. The specialized accounting software might be incredibly fast and run in the digital cloud, but the underlying architectural logic is exactly the same Venetian system. Every massive corporate merger, every sophisticated stock market derivative, and every single paycheck you have ever earned is tracked using this exact monk-engineered math. Even the transnational criminal cartels and the sophisticated money launderers who operate completely outside the boundaries of the traditional legal system are forced to use double-entry bookkeeping to manage their vast illegal empires, because mathematical truth is the only way to manage large-scale human cooperation. The rich people in the executive suites want you to believe that wealth is created by sheer vision. They hire expensive public relations firms to paint them as bold innovators and risk-takers, but the historical truth is that bold vision often leads directly to massive bankruptcy without an obsessive and paranoid accounting system to protect the capital. Wealth is not just about making the money, it is entirely about tracking and retaining it. The people who truly control the global economy are not the charismatic chief executives. They are the quiet and meticulous accountants sitting in the background, ensuring that every single debit has an equal and perfectly opposing credit. Pacioli understood that mathematics is the ultimate language of undeniable truth. A perfectly balanced ledger strips away all the corporate lies and empty promises. It forces human beings to face the cold, hard reality of their exact financial position, which is a reality that the working class is rarely taught to truly understand. Our modern education system teaches us algebra and complex calculus, but it entirely fails to teach us the fundamental accounting rules that govern our lives, leaving regular people completely blind to how corporate wealth is actually structured and hidden exactly as the people at the top of the financial hierarchy prefer it. So the next time you look at a massive multinational corporation or a sprawling bank, do not marvel at their towering glass skyscrapers or their aggressive advertising campaigns. Marvel at the incredibly simple 500-year-old mathematical ledger holding it all together, the quiet, unblinking numerical system that completely rewired the entire human race. If this deep dive into the true origins of double-entry bookkeeping and the forgotten historical legacy of Luca Pacioli opened your eyes to how modern corporate fortunes are truly structured, built, and relentlessly tracked, then do me a favor. Right now, smash that like button to let the algorithm know this factual historical conversation matters. Share this video with every friend and family member who needs to understand how the real financial world operates. Let us keep exposing the true mechanics of wealth and power. I will catch you in the next one, where we break down the next hidden chapter in the long history of money and corporate authority. Until then, stay informed, stay skeptical, and remember that sometimes the most powerful weapon on earth is simply a well-organized book of numbers.